Good afternoon, and thanks for joining us today to discuss our fourth quarter 2023 financial results. For the fourth quarter, we delivered 50% gross margin, 29% operating expenses, and 22% operating income. Our average call wait time was 1 minute compared to 1.3 minutes in Q3. We have made good progress on solving customer issues by focusing on both automation as well as expanding our field service teams globally. We expect to ship approximately 500,000 microinverters to customers from our U.S. manufacturing facilities in Q1. We expect that our shipments from U.S. facilities will be lower in the first half of the year as we reduce both factory as well as channel inventory. We will have the capability to manufacture IQ batteries in the U.S. in the third quarter of 2024. For non-California states, our overall sell-through was only down 1% in Q4 compared to Q3. In California, our overall sell-through was down by 7% in Q4 compared to Q3. The sell-through of our microinverters was down 27% in Q4, primarily due to the NEM 3.0 transition. However, the sell-through of our batteries increased by 58% in Q4 due to the high attach rate of NEM 3.0 systems as expected. In Germany, our overall sell-through in Q4 was down 32% compared to Q3. However, we saw sequential growth in activation for both solar and batteries as we continue to gain traction in the region. Approximately half of our solar installations in California were NEM 3.0. The transition to NEM 3.0 has been a little slower than what we anticipated. Installers are still installing NEM 2.0 systems, and this has caused a delay for some of them to sell NEM 3.0 systems. The ones who started are finding the sales process a little more difficult given the complexity of the tariff structure, the added cost of batteries up front, and high interest rates. One particular challenge we hear is their lack of confidence in the payback of the systems they are selling. This is where SolarGraph software with NEM 3.0 support is critical because of its advanced modeling capabilities. We expect the sell-through of our products to be seasonally down in Q1. In Q2 as well, although at a much reduced level, and expect the channel to be normalized by the end of Q2. The utility tariffs, which were once fixed rates, are now becoming increasingly complex with time of use rates, NEM 3.0, demand charges, dynamic tariffs, and our software is evolving to manage this complexity by leveraging artificial intelligence and machine learning for forecasting and optimization. We see this as an area of differentiation for us and are developing core IP towards that objective.
We implemented a restructuring plan in December 2023 to reduce our operating costs and align our workforce and cost structure with current market conditions. As part of the plan, we are reducing our global workforce by approximately 10% and expect to reduce our non-GAAP operating expenses to be in the range of $75 to $80 million a quarter in 2024 when these restructuring actions are substantially complete within the first half of this year.
We have two problems. One is a channel being full problem, channel inventory problem, and the other is the native demand problem. What we expect is a end customer demand roughly in the range of $450 to $500 million. We plan to ship $150 million, undership $150 million compared to the end customer demand. So while I cannot tell you the exact numbers, you should expect the sell-through numbers to be seasonally better as you approach Q2. The sell-through of our batteries in Q4 was the highest it has ever been. It was at 140 megawatt hours. So our battery demand, I'm happy to say, is very robust. In terms of dollars, gross value of our inventory is about $200 million, $210 million roughly. And we think that inventory is high. That corresponds to 110 days of inventory, I think. And we think that The number of days of inventory is high, so we are going on a war path to reduce that to a best-in-class level. I consider a best-in-class level at 30 days. That means we are going to be ensuring that we don't do any unnecessary manufacturing. We don't usually break that out, but in the order of significance, at least for 2023 overall revenue, it has been Netherlands, followed by France, followed by Germany. We see steady demand in France. Utility rates are increasing in France, already increased last year, expected to increase again this year. France is flat right now with all of this, and we expect it to grow. Yes, you can argue that the price on an EV charger is under $1,000, but when you have a bidirectional EV charger, all of a sudden your value is a lot higher. We are already working on a GaN-based bidirectional charger, which will interface to the car's battery around 800 volt DC, and that will convert DC to AC there.
So we don't see in the future that there'll be any system that would be solar only. It would be storage only or solar only as well. We expect that it'll always be an energy system, and that's the transition that the Netherlands market will also undergo very quickly. And by managing dynamic tariffs, which you need very sophisticated software to do because it's a day-ahead market and the rate is going to change on an hourly basis, you need very good forecasting of both production as well as consumption, buy and sell energy from the grid. All of that is done by that sophisticated software that we have, and layer on top of that grid services through participation in an imbalanced market. This is the direction in which the entire Dutch market will move towards, but solar will be a key element of it because that's the intent.
In general, the attach rate of an M3 solar system is 80%, according to the industry data. So attachment to our solar system, in the past for an M2, for example, for an M2 was about 10%. And that has increased now to 50% because it just makes sense to add a battery. That's why we said our sell-through numbers improved by 58% compared to the prior quarter. We have our sales, our team actually listening to our installers and their salespeople. We are, we can do a lot more there in terms of simplifying our software so that we can really make sure that the selling at the kitchen table becomes a lot easier. And that's what we are going to do in the next few months.